Okay, let's go ahead and reconcile July. We're going to start with our credit card statement. Okay. Here it is. All right, our ending balance, ending date. All right, do we have any finance charges? Yes, we do. Okay, let's book that. Again, once we move forward and complete reconciliation, this amount will be booked, right? It is a transaction that we're booking, so let's make sure we understand it. What's happening? Well, they will add, the bank, right, the credit card company will add this balance of $39.18 to our liability balance, right? So we'll owe this much more money. What else is happening? Well, our expenses, interest, in finance, 61,700 goes up as well, and expenses go up when debited. So here it is, debits and credits are in balance. This amount, even though we're entering it once, right, we've covered it before, it's a debit to account 61,700, and it is a credit to account 21,100. Okay, let's start with our reconciliation. Okay, we can see that that amount is marked up, so we can do the same on our end. Okay, so here we are. We're going to mark off our transactions. Okay, and then we had a payment, right? Voila, right? We finished reconciliation, we're at 0. Let's finish it now. Okay, summary, credit card, here it is, balance, matches, transactions, payment right here, transactions right here, finance charge right here, all good to go, right? So at this point we would print this and attach it to our credit card statement indicating that it has been reconciled. Let's go ahead and move forward with reconciliation of our bank statement next. Okay, so here it is. All right, ending balance. All right, let's see, do we have service charges? Yes, we do it right here. We do, we can enter it. Or we can use our general journal entries. Let's, we didn't do it on a credit card. Let's do it on this one. So we're not going to enter anything right here. We're just going to leave it empty and proceed, and then we'll book this one, right, using general journal entries. So start reconciliation. All right, you see this amount is not showing up because we didn't book it. Okay, so let's go ahead and reconcile what we have. All right, we have our checks. All right, and then we have the payment for the credit card. But we're not in balance because we got to book this, we got to book the draw, and then we got to book the deposits. So we're going to do it using general journal entries. Okay, let's go ahead and book our deposits first. All right, again, we're going to use our general journal entry. All right, so that's going to be our July sales. We're going to use the end of the month date to book them. And let's say that we want all of these amounts to show up individually, so we would reflect them individually for our bank account. Bank account goes up with debited. All right, let's just put them all in. And then we can add descriptions. Okay, so this way, each one of these will show up, not a lump sum, right, like we compared it before. Again, it's important to understand all the different ways you can book transactions and the impact of the different ways you book them, right? So here we are, one more. All right, and 12,277.50. That's one way to double check. That's correct, and it's going to go against our sales, right? So here it is. That's what we will book, right? We can do a little bit more description. So for example, this is our cash sales. Just again, it's an opportunity to provide cash sales. That's our credit card. Okay. All right, and that's our July sales. Okie doke. So here we are. Debits and credits are in balance. We're using general journal entries, so we don't need to explain it here. Again, bank account goes up by each one of these amounts, even though we could have done it as a lump sum, but when we do it individually, you'll see on reconciliation, each one of these amounts will show up. Again, it provides additional level of the details, but it will take us longer to book, as you see, right? And then again, all of this money is coming from sales, right? So account 41,100 sales/revenue goes up when credited. So again, let's go ahead and save it. Okay, close it out just to take a look. And you see each one of this is showing up now, unlike when we did it lump sum. So we can go ahead and mark those off. Okay, so we're done with these. What else do we have? We have draw, and we have some fees, right, that we got to book. We can actually book all of it, right, again, using our favorite general journal entries, right? So, and we want to book it so each one of those amounts shows up. So we can still use end of the month, right? So here it is, and that's our July draw. Right, so we know that our bank account will be impacted and it goes down when it is credited. So here it is. Again, we had 500 ATM, right? And then we had another transfer to personal account. Right, so each one of these amounts will reduce our bank account balance, and we can put description. That's our July draw. Right. Okay, and our equity, in this case we're using draw account, will be reduced by 7,500. I mean, here it is, it's debited, right? Again, draw, if it's an equity account, it's kind of like accumulated depreciation. It's an offsetting account, but still it's an equity account, right? And equity is reduced when it is debited, and at the end of the year we'll close it out, and you'll see how it will be closed into our equity account, and therefore that's why, again, it reduces our equity. It makes sense, right? We take money out of the business. What does it do? It reduces ownership in the business. Okay, this one is good to go. Let's go ahead and save it. All right, and we're going to take a look. So you can see they're showing up right here individually. Let's mark those off. And we still have these two, right? We got to book them. And that's what we'll do again. We're going to use our general journal entries. Okay, we're going to use end of the month fees. All right. Let's put July fees. What do we know? Well, we know our bank account will be reduced, right? And has to be credited to reduce. So here it is. And that's our service fee. And what else? And we have our merchant fee, right? And both of those reduce our bank account, so that has to be credited. Okay. All right, what else is happening? Well, there's two expense accounts that are being hit. So first of all is the bank service, right? So here it is, $25, and that's service fee. All right, and the other one is merchant account service fee. So here it is, right? We could have booked them as individual. Each one of those would be an entry, or we can just use end of the month. Actually, the date is the same, so we can even use the same date right here. Okay, so again, bank account is reduced, therefore it is credited by each one of those, and expenses go up. In this case, we have two types of expenses. Again, like I said before, it doesn't matter how many debits and credits you have on each side. What matters is that these two amounts, the sum of all debits and the sum of all credits, have to equal to each other. So let's go ahead and book it. Okay, and sure enough, they show up right here, and we can mark them off. So this time we didn't book that $25 through the beginning of the reconciliation interface, right? But we still were able to book it, right? And we have $500 difference. Okay, makes sense, right? Why do we have $500 difference? Because I made a mistake right here, right? We had our $3,500 booked twice, right? And even though it was just 3,000, so okay, that's our draw. July, we're going to edit it. Let's go ahead and edit it. Here it is. Very easy, right? Okay, let's go ahead and do 3,000, correct it. In return, this will be reduced by 500, so it turns into 7,000, right? We make mistakes. Everybody does that, right? Right here. So that's 3,500, 3,500, right? Made that mistake, but that's why we reconcile, to catch those mistakes. Because again, especially in catch-up mode, very easy to make mistake, right? Previous month you had 3,500, now you have 3, you forgot to reduce it, but nevertheless, let's save it and close. And now we don't have a difference. Okay, so again, what I want to illustrate with this is that we do make mistakes, but reconciliation is an excellent tool to catch it, right? So here it is. Everything is good. It's already marked. We're good. We're going to finish it and view our reconciliation report. Here it is. Ending balance works. Deposits here right now, they're detailed, works. And all of our draws and other charges are right here. And again, remember, we caught it. We caught that this is 3,000 instead of 3,500 during reconciliation, even though we booked it wrong during reconciliation. But occasionally you might book it before. You might book it wrong. Again, we do make typos. That's perfectly, reasonable mistake. It's not intentional, but reconciliation allows us to catch those. And that's the value of doing reconciliation every month. And at this point, we would print this, attach it to our bank statement, and we're done with reconciliation of July.